Hey everyone, Larry Bailey here, Mortgage Workflow Partners, bringing you another weekly market update. This is for the week of April 7th in review, 2025. And while inflation came in lower than anticipated in March, this positive development was overshadowed, of course, by ongoing news about tariffs and trades and reciprocal trades, tariffs and everything else, all kinds of tariffs. Here's what we're going to cover in today's review. Again, this is stuff that happened last week, in the week of April 7th, 2025. Consumer inflation eased in March. We'll cover that story. The next one is wholesale inflation also eases, which is a key component, is cooling. The next story is homeownership remains a solid investment option. The next story is elevated employment claims persist. We're going to follow it up with a family hack of the week, and then we'll talk about what to look for this week. Before we do that, if you're listening to this on podcast, thank you very much. You can head over to masteringencompass.com, though, if you want to see the full video, which includes for the Family Hack of the Week recipe, just saying. Also, if you want to learn how to use the Encompass platform from a guy like me, which is over 20 years experience in using and administering Encompass, as well as 30 plus years in mortgage banking, both retail, non-retail, all channels everywhere. That's me. I train you personally every week with live classes as well as pre-recorded videos. Check it out. You'll find out more information at masteringencompass.com. Let's get into this first story. This is going to be all about consumer inflation easing in March, and we see a consumer price index model there on screen. The core CPI, which of course excludes volatile food and energy costs, is a result of looking at the data which shows inflation was cooler than expected last month. Both the headline and the core CPI, Consumer Price Index, those readings were falling short of the forecast, which was great news because the headline CPI, that dipped 0.1% from the prior month, while the year-over-year figure softened from 2.8 to 2.4%, a decline largely driven by a sharp drop in gasoline prices, if you can go figure that. The volatile food and energy costs, though, they went up by 0.1% month over month, and but the bottom line for that is it eased to a 2.8% annual rate, down from a 3.1% previously in the previous reading. So this marked the lowest core inflation reading since March 2021. So all that's really good. The shelter cost, that remains, of course, the primary driver of ongoing inflationary pressures. That accounted for 35% of the headline CPI and 44% of the core reading. So while shelter costs were relatively favorable in March, this was largely due to a significant decline in lodging away from home, which is something, again, if you're looking to travel, you held back a little bit apparently. That also coincided with reduced travel and other signs of economic slowdown because, again, you don't travel when you have a fear of your employment or you're running out of cash. Bottom line in this story, of course, is that the cooler than expected inflation report would normally be welcome news for the bond market, as lower inflation obviously helps preserve the buying power of fixed investments over the long term, like mortgage bonds. However, March data preceded the imposition of new tariffs, which have continued to be the major market driver. So we'll see, we'll see what happens with these wonderful tariffs that we have to deal with and how they affect the overall bond market. Next story. Wholesale inflation also eases, which key component's cool. So the producer price index, that's the PPI, it's a key measure of wholesale inflation, of course, between the manufacturers and the retailers. That declined 0.4% from February to March, with the annual rate dropping from 3.2% to 2.7%. Again, really cool, really good news. This was much cooler than the 3.3% expected reading that had been forecasted. The decline was largely due to a plunge in gasoline prices, just like the CPI report, because you got to transport the stuff from the, from one position to another, meaning from the manufacturers over to the retailers, and that's what the producers do. So excluding the more volatile food and energy sectors, the core PPI still went down 0.1% month over month, and the year-over-year rate fell from 3.5% to 3.3%, which was also below expectations. So in the middle of all this, of course, it's important to know that the PPI data is crucial, and as it impacts the personal consumption expenditures, that's the PCE index, the Federal Reserve's preferred inflation gauge. An analysis shows that many shared components such as airline passenger services, portfolio management, and healthcare were much cooler in March compared to February's PPI report. All of this data suggests the upcoming PCE, again, personal consumption's expenditures, that report, which is set to come out on April 30th, could also indicate easing inflation. However, with the PCE report covering March data, the market reaction may be muted, of course, if ongoing trade and tariff issues remain the key focus later this month, which it will. So we'll see what happens. This next story, homeownership remains a solid investment option. I can tell you, I was out looking at second homes this weekend. I decided, no, I'm not going to do it. They're expensive. I'm in New Jersey, so I was looking down Jersey Shore. Yeah. So here we go with the story. Recent data shows that home prices across the nation continued their upward trajectory in February. According to Cotality, which is formerly CoreLogic. Yeah, Cotality. I know. According to Cotality, prices rose 0.3% during the month and 2.9% on an annual basis. ICE reported a smaller 0.11% monthly increase, with their index showing annual growth slowing to 2.7% from February, down from 3.4% in the previous report. Bottom line here is Cotality forecasts a 0.4% increase in home prices just for March, with an estimated 4.2% annual gain over the next year. Just so you know that this aligns with other industry projections at approximately 4% appreciation over the next year. Such forecasts affirm that the homeownership remains effective means for growing Americans to build wealth. Hey, listen, you got to find some place to live, right? And so the question is, do you rent or do you buy? And that depends. I've got family that lives in Seattle. They just found a wonderful one-bedroom apartment in the suburbs of Seattle, and they're paying $1,890 a month, and for a really nice place, honestly. The median sales price in that area is like $800-something, which would have gave them a $6,000 or $7,000 mortgage payment. Are they gaining money if they, that extra $4,000? What if they put that somewhere else, even if it was in a certificate of deposit? Would they make as much as 4% a year? Maybe in a money market. I don't know. But that's what I see is happening. Yes, homeownership remains a solid investment option, but if you can find a place to live, do you take the extra money and put it into an investment versus into real estate right now? I don't know. It's a great question. We'll see what happens, see what people do. All right, back to the market update here. The next story is elevated unemployment claims persist. We saw weekly initial jobless claims rising slightly to 223,000, staying historically low. Continuing unemployment claims fell by 43,000 to 1.85 million. However, they have remained persistently above 1.8 million since June 2024. We've been talking about it that long. The bottom line here is new unemployment filings are low, and the elevated continuing claims suggest individuals are taking longer to find new jobs. With many people exhausting their 26 weeks of benefits, the stubbornly high number of continuing claims indicates underlying weakness in the labor market and a slower overall pace of hiring. We've seen this now for quite a while, so it's tough. Family hack of the week. Every week, I'm amazed at how we always have like a day. So you should celebrate National Brunch Month. Again, who knew these things? With this delectable blueberry coffee cake recipe from All Recipes. It serves 12. It's on the screen right now. If you're interested in that recipe, head over to masterencompass.com, do a screenshot, and go bake some delectable blueberry coffee cake. Here's what we're looking for this week, gang. We see key housing reports to monitor, including home builder confidence on Wednesday and new construction data on Thursday. Additionally, March retail sales numbers are scheduled for Wednesday, and the newest unemployment claims come out on Thursday. Awesome. You guys have a great rest of your day. My name is Larry Bailey. MortgageWorkflowPartners.com is where you'll find me on the website or on LinkedIn or over at masterencompass.com too. I'm all over the place. I'll see you there. Take care.